stream it to the world today. Let's scream it off the balconies. Why not? All right. Welcome to 929 Sunday session. Last Sunday of the month. They told us this would be the worst month of the year, or historically this is the worst month of the year. Well, we called bull on that one because we made new highs. We're looking at the S&P, and it is making new highs. And the NASDAQ isn't, but pretty close. The Dow, I believe, made new highs, and the small caps, of course, they're still far away. I will have a specific video about the indices, and it's pretty important. It's about 5 minutes at the end of today. So Sunday night, some of you go to bed early. That's fine. You can watch it Monday morning before the market opens. It's going to be 5 minutes, and I think I'm going to lay it down. I already have a plan what I'm going to say, and it should be fairly easy to understand. Don't miss it. Let's delve into the 150 tickers we have to cover today. All right, we'll go into alphabetically ordered. The first one is Apple. Sell, sell, sell. No, don't sell, sell, sell. Let's zoom in to see what's going on with Apple. First of all, the whole market is bullish. So if you have any judgment call, lean on the bull side versus the bear side. This is the only one of the few mega caps I would not invest in for the long term. You know my feelings about it. I don't think Tim Cook is doing as great a job as we give him credit. That's putting it nicely. He's got so much potential in this company, and he can't even put out a product on time. They haven't released AI yet. They've announced it 3 times, and it's still not there. I don't know if they released a new OS with it, but I would have heard about it from you guys. Nobody mentioned it, so I'm going to say it's not out yet. The phones are out, but not the actual AI feature, which is pretty silly. That's what Microsoft used to get in hot water for in the 90s, maybe even the 80s. Anyway, vaporware so far. Show us what you got, Timmy. Charts-wise, it has a good solid bounce all the way down to 215, 214. If you lose 214, that's a big if. We're miles away. You open another leg lower, that's about $12 to $17 from there. So let's say the market's hiccup. This one could end up at testing 200-ish. Meanwhile, the upside is the upside. If you take out 233, you can get yourself $5 to $7. You will need a catalyst. You will need help from the media. ABBV, I don't know what it's doing. I know it's come up on a couple of... Okay. I'm not sure what you're asking here. If you're looking to buy the dip, not for me. Great price action. They stepped up their game, and I don't see the commensurate step up in the results, but there might be something about future results. So study the company. Technically, I think this is a nope. This is not an obvious point of entry. There might be better points of entry. That's the very short-term comments is if you lose 189, you're probably going to lose maybe $7 to $11. Airbnb, definitely no touch for me from a concept. I'm reading more and more stories of horror with Airbnb. Now, technically speaking, that blue box is above where we are. I believe it's going to be a concrete ceiling. You're going to need a lot of good news to cut through all of that concrete. Yes, news does move, and I mean by good news like an improvement on the bottom line. That's the kind of news I'm looking for. Something that moves the needle in the financials. And it's kind of a pretty wonky financial situation. I'm not sure what happened here. So there is improvements quarter over quarter and year over year. But whoa, that is a lot of chart stuff to overcome up there. Let me zoom out a little bit. Yeah. So you can think about it as Head and Shoulder was lost around 140. And it's going to take a lot to overcome it. And when you do, 148, even more. More, like literally more volume. That red line is not anything I drew. That's the heaviest volume spot. Look at it, by far. So how about, what if it loses this yellow, which is a long shot? This will need a market correction for that to break through. If they lose 110, they probably go into the 90s and 80s, high 80s, low 90s. Not a forecast. I'm just telling you what's at stake. Meanwhile, I think it's range bound. The range is wide, but it's range bound. If you're an investor for the super long term, nothing to do. If you're looking to invest in it, I would look into selling puts way below. Like a stock alternative strategy. Accenture, a pretty big move here. Oh, earnings, okay. All right, so now you have all the wicks from the earnings to overcome. If not, it's probably easier to come back into 337 than it is to, say, go to 377. Let's zoom out. Most definitely. Okay, the comments on Airbnb. This one is trying to get back into these. Of course, this is higher, but it's the same concept. These wicks are trying to overcome a bunch of sellers. So if this person, before they bought, asked this person, hey, how'd that work out for you? That person would have told them, oh, it was great. Here, hold my shares. So what I'm saying is be careful going long into a prior fail. Look for dips into 340-ish. Adobe probably, if somebody here asked these people or these people or these people what happened the last time they bought it. Okay, so I put a letter R up there and look how perfectly well they worked. If somebody read my letter R and said, okay, let me not buy when Nick puts a letter R, sometimes you get it right, but it's not good behavior. Well, the same as there is a letter R, there is a letter S down here. Anything below 500 is support for now. For now. If you lose 500, you probably will end up at 450, 460. Those are the big numbers. And it's going to take a lot to come out of 560. So if I was in shares, I would sell covered calls aggressively. If I'm looking to buy shares, I wouldn't. I would do a stock replacement strategy and or stock alternative. Synthetic stock is probably a better word for it. Let's talk about it during the live sessions every day. ADM, I don't know the company. It looks like an okay P&L, and it looks like it's stuck in a tight range. So you've got 57 versus 63, and then 66. So 57 will get you retested on these extreme lows from January. And let's assume these don't fail, then the better entry would be a little bit lower. And if those fail, I don't see why, but if they do, I would bail because I don't know how low it goes. Overhead resistance anywhere above 63. 63 through 66 is going to be very difficult. Look how strong this rally was in the strongest market I've ever seen, and they couldn't fill the gap. So support, support, support. Once it's lost, overhead supply. Wow, I mean, what the hell was wrong with people following up there? Holy moly. Golly. That is a big miss on traders. AES. What is this? I don't know that company. Oh, I do have marks. So I do have 2 marks, and it's going into those 2 marks. It's been struggling to get back there. Okay, let's zoom in. So resistance zone and another one above. So this one is doing very well. The breakout from here, let's measure it, $2-ish. Okay, so they could get to 20.6. So if I was long, I would be out like a light. I mean, this is a pretty boring P&L unless you know something about their future and you're an investor for the future. If you're a trader, I'm out. I don't want to know where they're going to stop rallying and turn around. If you're an investor, do your thing. This one, almost similar conversation. They've overcome a prior fail and tested it for footing. So now you can say everything below 5.8 is support, and anything above 6.8 is going to be tough. 7, I would be out completely. So if I'm in any gold company, I'm out. Hi, Peter. If I'm investing in any gold company, I'm out. Why? Because gold has never been higher, and these are companies, they're not actual gold. Let's say the market's correct. This one have a lot to fall. because their price is tied to gold, but not unless the market is doing something else. If anyway, I'm out of gold companies. I wouldn't be in them. I would not be in AMD at all, like at all. And this is a funny one here. So we put an orange line, and I said, I bet it's easier to get to 122 than it is to get to 168. And I was right. It got to both, though. It went to 122 and 120, 194. And it's getting to the top. So this is the place where if I was long in AMD, I would be out. Technically, you could get to 188. I see it, 185. These wicks are going to be death, technically speaking. We are, how about I tell you 174 is going to be a problem. So 174 is going to be a problem. These are comments that you should write down if you're long AMD, and you should be selling, well, I shouldn't tell you what you do, but if I was holding shares, I would be selling aggressive covered calls to lower my entry price. So AMD is in danger of pulling an Intel over the long term, over the longer term. I think they're getting wiped by a completely different logic of thinking about processing. And if they don't do the shift, we'll see if she's up to it, Lisa Liu. It's not a bad investment. I'm just telling you the price action and how to manage the investment. I don't know this company. 52 should be very difficult to overcome. Anything above 52 is going to be tough. So they are buying dips and making higher high, dip, higher high, dip. Okay, if they make higher high, 52.5, I would be out as a trading comment. As an investment, it's okay to hold, but you should be selling some covered calls. The P&L looks pretty attractive, so it might be a good investment for the long term. All right, okay, I think I'm on a wrong candle here, so I don't confuse people. There we go. Amazon, I would have been out. I told people in the live, in fact, I would have sold extremely aggressive covered calls, maybe even replaced my stock with an alternative strategy, because they don't pay a dividend, do they? Anyway, in other words, you're not missing out on anything by selling your shares. I think Amazon has legacy issues coming up. It's become a Walmart to a degree, and Walmart has become Amazon to a degree. So I wouldn't think of it as the old Amazon anymore. Let's see if this old new guy, I said new guy the other day and somebody took offense to it. Okay, somebody, I don't know his name, the guy that replaced Bezos. Let's see if he's as good a driver of new ideas as Bezos was. I'm sure Bezos is still involved, but this guy is in charge, right? Technically, this is a mountain. This yellow box I drew, the letter R, everything is working out perfectly. So respect it and respect the support below 180, and you'll be good to go. I would do an iron condor on it, but we're starting to go into earnings. I think Tesla and Netflix are the first two, so be careful with that. ANF, I would never invest in this company just because of how volatile the stock is, and it doesn't match the price action doesn't match the fundamentals. Which is a struggle for people that are investing. Now, it is a great trading stock. You see the comments? Investing, not for me. Trading is tradable. I wanted to short it up here, and I missed out. It was very difficult to make money with it, but I knew it would come back down hard, and it did. I think it can come back a lot lower. The X is still in play. How does that happen? If they lose 128 for whatever reason, I think they get to the letter X in a couple of steps. The big line is 123, 121. That's the big line. And the other big line is 160. So they're going to ping pong inside of a wide base until one of them, if you want me to put a visual box to it. Let's put the aqua lines. And I'll make them thick. I think they have a wide range they can ping pong inside before creating some dramatic things. A new high will require you to, I will start thinking new high if they break through the blue box with confidence. And I think if they lose actually the lower third of the blue box, I think they would start being in trouble if they get to here. Actually, more than a third. This will be warning. Okay, enough time on this guy. Okay, I'm short this one just by proxy because somebody said, hey, they're trying to short it. I should read their comments. They did more to it. So I'll read them over today maybe. But never mind, because I bought a put out in time and I sold 2 puts against it. One for this past week, and it died, and I sold another one for next week. And I collected more premium. So now if this week it doesn't fall, I would have more than 30% of my cost basis recovered, so I can gamble a week. You understand? So it's a small short just for fun. I don't know what's going on, but I can't justify this in here, so I'm just jumping on the bandwagon. This here is not an obvious point of entry. Let me zoom out. Did it split or something? Why do I have, no, it didn't. Holy moly. People say, well, it's in a breakout. Okay, but you can't defy the laws of gravity for too long. Look at ANF. You can for a bit, but this looks weak on top. So values, I'll give you one. 130.5, 130.3. If you lose 125.5 before 130.3 is taken out, you're probably going to end up at 122, 123, and then that could start a debacle lower. These candles offer no support. Look how uniform they are. Tell me this is a human doing this. It is not. ARM, the opposite of a lot of companies where this stock deserves where it's at if you think about what it's done for the world. So all this new technology that drives brains is based on their architecture. They don't make anything. They sell ideas, and people build things with their ideas. So if you believe in, say, NVIDIA, you have to believe in this one and Qualcomm. And technically, this one can come down to 133, 132, maybe even 128. And of course, it can bleed up to 164 if the market goes there. But I would be looking to buy dips if I'm not long already. The alternative for that would be to sell puts to get engaged with the stock. We've done that several times. We bought shares, we sold multiple sets of puts on it. If it flash drops one day because the market is freaking about something and you wanted to get long ARM, you can sell puts below $100 for the end of the year and forget about it. The worst that can happen is that you can be long that stock at 50 or 60. Why not? We did that several times. I don't know this company. Okay, something is about to happen because you have lower highs, higher lows coming into a pinpoint. So the question is it going to be 1280? Is this what you want? A trust ord? Okay, or 1160. I don't know which one of those two. AVGO, everything I said about ARM, I would probably say here. I would buy the dip. If it falls into 158, 160, I would sell puts lower to own shares like we did before. We did that twice already. And let me zoom out and show you the big picture. I'm going to mention something on almost every stock that if something like, if the market's correct, if the market's correct, I don't know who's trying to speak. Can you hear me? Can't hear anyone here. When have we ever heard any of you in here? Oops. 1 second, okay. Okay, never mind. I had a little blip. Skip, I don't know what you mean. Can you hear me? I can see you, I can't hear you. Okay, continuing on, AVGO. I like to buy dips. This P&L looks so good. It's fake. It looks fake. So it's a buy the dip moment. And on the August dip, we sold puts. On the September dip, we sold puts. On the next dip, we'll sell puts. If I don't own shares, those were my entry attempts. If I wanted to get involved with this stock, because of the low dollar amount, relatively speaking, I can do the stock alternative strategy, reach out during the live. We'll do that all day, every day. Boeing, a lot of people are tempted to buy the dip, and I don't disagree. I shared some sort of an iron condor. Let's see if it works out. Was that for us or somebody specific? They asked for it. So I don't mind buying the dip. So my problem is, first of all, we saw the move coming, the headline move before it came out. These purple scratches, where when somebody said, what's going on with Boeing? I said, I don't know, but I tell you there's a move coming up or down. because of how tight it is. So I said the headline will break out and the market will react to it, and it was to the downside. So if I look left, there's plenty of support, but look how wide of a zone it is. So I put the yellow box to say, okay, this is probably the worst case scenario for now. So in the 50s, 150s, 140s, 160s, that's kind of the range it's going to be stuck in. Rallies into 175 are going to be sold. So if that's the case, then I would sell calls up there if I own shares. And if I didn't own shares and I wanted to own shares, I would sell puts in the lower end of that. That's how I would treat it. As far as buying shares now and starting to make money off of them, as an investment, it's not a bad idea, but don't do more than half. I wouldn't do more than half. I don't want to tell you what to do, but I would not do more than half. I would be brave enough to, let's say I wanted to buy 200 shares, I would buy 100 and start selling aggressive puts against them. The stock alternative strategy, I don't want to discuss it out here. We'll discuss it in person. Okay, BABA. I wouldn't touch anything with China stocks. In fact, I think I bought a put in one of the Chinese ETFs, or at least we discussed it. This rally is based on the mother of all bazookas in China. They unleashed a huge QE. Now, nobody's asking why. Just like me asking, why is the Fed so aggressively committing to cutting rates when we are at all-time high everything? We don't have any asset that's of size that is not at all-time highs, and we don't have an unemployment problem yet. And inflation is still not solved yet. I don't know what's going on in China, but it seems similar. Why are they panicking into a QE? Anybody going long any Chinese stocks now for an investment, you are sheep for the market makers. I'm not accusing you of stupidity. I'm just telling you the reality. Look left and tell me what happened to the person that bought these stocks at these levels for the last 5 attempts, maybe 6. It's a wake-up call to anybody that's buying calls here or shares as an investment. Now, the traders among you, fine. I get it. You're a momentum trader. You think you're going to make $10,000 next week. Go for it. It's just not for me. Levels, anything above here has been sold hard. So you should know that. Anything above here is at moment's notice goes away. As far as checking back to the trend line, just draw whatever trend line you want, and that's the risk you have on the downside. Visually, I can tell you 101 through 97, and then if not, 91.5. So I would buy a put diagonal and wait and see if I can make it work. If it works 1 week, then you're golden. Then you can sell another one the next week and another one, and you would have yourself like a November put. And I wouldn't target just BABA. I would do it on an ETF like FXI or Asher or something. BIDU, everything I said about BABA, also here. Let's see, when was it? That's even worse. Okay, look at all the sellers that are spread out through 120. This might have a pretty good solid P&L. But technically speaking, from a charting perspective, anything above 112 is going to be very, very difficult. So how close to 112 are you from an investment perspective? I do have a friend that was buried in it. I sure hope he took my advice to get out up here. Are you listening? Okay, I'm talking to you, friend. You know who you are. BITO. I would not buy BITO here. Now, this represents Bitcoin to a degree. It is not an alternative to Bitcoin. Now, the good thing about it, if you sold puts with me a few weeks ago and you made money, you weren't assigned, we want to repeat it, or just own the shares for the long term. So if somebody buys 100 out of 1,000 shares they want to own, you can buy it at any point in time. Now, they don't commit to paying dividends, but when they do, it's massive. And if you bought it the first time at the price I said to buy it at, which was way below here, you now own it free and clear. Free and clear. They paid you enough dividend to cover the whole price of it. So all your stock are free. You can sell covered calls against them whenever there's a huge rally. But to just buy and say, okay, I'm going to go from here to 30, you could, but don't go all in. I like it. I would build a portfolio of it. It's a low dollar thing that pays a lot of dividend, fixed income, but it's not guaranteed. So here's the path that I think might happen. A little bit more upside, and then you might go, whoosh. Be ready to jump in on the whooshes. BLBD, Bluebird. Is that biotech or pharma? School buses. That was way off. Okay, school buses. All right, let's see here. That was hilarious. And pretty tricky technical. Let's go to weekly. I want to make sure I see a monthly. All-time high zones. Okay. Buyers below 44. Better buyers below 40. Shorter term buyers at 44.5, I can see. And these are strong buyers with the long wicks. Anything below 44, they're buying. And conversely, you have hard sellers. I'll give you values, 51 and 52.7 resistance. Bristol Myers, I know what they do. Technically, it's a descending channel that they're trying to snap out of, and they may have made some progress. So the next dip should stay above 46 to not give up that progress. If they dip down to 46 and come back and beat 52, they can probably get to 60. What they want really is to beat 54. You see that from anything below 56 through 48 is very difficult, and that's what they're tackling. And if you just do it with a little bit of ascending channel as opposed to these, you can deal with it. The good news is that everything below 44 is now established floor. We don't want to talk about losing 40 because it'd be devastating. I just shorted this stock. Simply stated, that red W is a bearish harmonic, and I'm saying, okay, there might be some downside more than upside. I'm risking something because we're going into banks. Okay, so 5% GDP in China. I remember when the market would crash if we knew that China growth would drop to 7 or 6, below 7. It was like, oh my gosh. Talking about the Chinese conversation earlier. We had the US market correct hard because China was the growth engine for the world. And the question was like, what if the China growth reports, their GDP would drop to below 7% growth because we were in the 12s and 14s, and now they're pouring all the CHWY to get back to 5. Just think about that. That wasn't too long ago. Okay, 144 is a good base. 148 is a decent base if it gets there. I'm short. I forgot how I shorted it. Probably through a put diagonal. I don't remember. Maybe a sold. I think a combination of a sold call spread out to December and a put diagonal. Citigroup. Banks are going into earnings. I wouldn't do anything with the banks. What the hell is this? Just what the hell is this in one day? No earnings, no nothing. Citigroup goes from 60 to 56. Okay. So how about I say this? If it doesn't get out above 64.5, it's going through that wick in the next few weeks. Banks are getting all the advantages from the governments. So they're basically getting free money, and Powell is trying to help them out. He tried to break them when he was raising rates. He broke a few, and he's trying to make it up to them now. It's hard to compete. It's hard to argue with their bottom line. Okay, they're just creating money out of thin air. Plus some money, it's paper money because they put loan loss reserves or something like that. And then they say, ooh, look, we just beat by $2 billion because they're allowed to take off some of those loan loss reserves. I'm just making a point that you can't argue with their fundamentals, but you can trade their charts. Anything into the letter R is difficult, and they're just coming into it. It's shortable at 64 and 65. And when I say shortable, I never mean short the stock outright. I mean put in a bearish position with calls and puts. Okay. Not an obvious entry point. It's the middle of the range. From an investment perspective, if you own it, enjoy it. If not, I don't think this is a beautiful entry point. It could get to 66, though. Caterpillar, I'm going to say it again. I'm short. But via a December bear call spread, so I don't need a drop. I just need it to slow down from rising. Awesome company. I had a rule to never short it, but somebody asked, and I said, this is how I would short it. That red W is bearish, but when I drew it, I said maybe it drops from here, vulnerable, or better yet, from there. So I have two shorting points, and my short is above here. So I took the chicken way out of it. I'm short, but I don't need a drop. So it could hang out here, get a little bit higher, a lot of bit higher, and I'd still be okay. Beast of a company. CCJ, great run, great timing from Raghu. I believe, well, he had some rough patches, but he managed through it and updated us. This here is not a good starting point from a chart perspective. Look at it. We have a range. We're right in the middle of the range coming up with super speed. This is copper, I believe. Maybe. Anyway, oh, uranium. So now talks of nuclear energy, this and that. So think about it as gold. Trades in the same mentality. People are in it for a beautiful future. And a lot of it is not here, not now. But not an obvious entry point. Put it on your to-do list to get more for the long term. And it is an investment because if you think about it, we need nuclear energy. CCL, I believe they're going into earnings, so I'm not sure why you're asking me today. It's doing exactly what I said it would do. And you're going to need to throttle the entries here because it's inside this bowl, and it is going to probably struggle with this. Now, all this is out the window because we have earnings. Talk to me tomorrow on the live. We'll look at the options. Maybe there are some clues. I'm going to pause this for a second. One moment, please. Okay, I'm back. Sorry, I'm here trying to manage the household. It's empty, and I got to pause to go take care of the dog. He's barking up a storm. Okay, CEG. What is this? Constellation Energy. Is it nuclear? Renewable products, energy solutions. Okay, so clearly there is probably expectations of future benefits because on the face of it, nothing is good here any better than a month ago, and the price action is pretty big. Let's see here. Wow, okay, so all-time highs. I don't know what to say. Who's asking here? Are you looking to short it? I mean, you could from a red W perspective, which is a harmonic. If you are shorting, just make sure it's manageable way to short. Let's see, I sold the credit call spread, the finance part of November puts. Oh, 3 Mile. Oh, you guys weren't kidding when you mentioned 3 Mile Island. Oh my gosh. Okay, so be careful with that short. I mean, it's still manageable. Reach out to me, Aaron, during the live. Okay, don't let it get out of control. Celgene, not Celgene, Celsius. So I thought it would hit a floor and get bought out, but I knew that it would be a range. So I said, okay, if you want to get long, you sell a put spread to get assigned. And if you got assigned, but I said very specifically, it would be half of a position. So if I'm in that half of a position, I am not adding here just to see if the market's correct. If the market's correct, this one could be much lower, and that's when I will add. And what if it doesn't correct? Then you didn't need to add because then it could meander back up to your price. Hopefully you've been selling covered calls. So the strategy wasn't perfect, but it wasn't bad. It was half of a position, and the break even was in the high 30s, I think, with the opportunity to add double the trade, but not yet. So I wouldn't add here because if you didn't need to add, you didn't need to add. And if you needed to add, then you add them lower. So if that's what you're asking, it's inside of a very wide support zone and fundamentals look pretty good. If you look down right, there's no disaster. It's just expectations of price action. If you wanted to go long for the long term, you just take a starter position. Same logic. You start here and you go lower. Charter Communications, I don't really understand their business, but it looks pretty good. Okay, I should say no alarms. Very wide range, like Boeing, and the range is tightening. So if you look at it, you have this coming into a point. So something is going to happen from here. Okay, so we'll see. Let's narrow it down. Descending channel, shorter term, you see it? You got to respect it. Now it's hitting a baseline. So maybe this is the curl. These are all maybes, right? We're discussing what's going on here. So perspectives is this area needs to be broken to get to here. Don't know if that's easy. The easy thing to do is to line up a credit put spread to start a long maybe with it, buy a debit call spread, a longer term purchase. So this way you're catching the falling knife with kid gloves. If you're looking to short it, you can short against this set of candles. So anything above 350 should be a struggle. CHWY, you misspelled the ticker. Good thing I caught it. This is a stock I would not touch up here. No, I'm kidding. Actually, I would caution you against it because Wall Street sometimes hates it. We were long CHWY on the way down in 2022, and it was a bear to get out of. We won, but it was a freaking struggle. And now everybody loves it. Look left, no way in hell I would touch it here as an investment. For starters, they gave you the concrete ceiling right there. And this ain't no Amazon. Amazon did one of these and they took it out within a month. This is a gigantic tick right there. Everything inside this tick should be sell, 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 sell. That's all of these people stuck. They got unstuck here. Now there's a new batch of people stuck. If I was long CHWY and I got this tick, I would be out like a light. Now it might come up here, but markets have never been higher and you're trying to get up there. It's a good trend. If you want to own it for the super long term, fine. I'm fine with it. If you want to sell puts to own it, that's even better. You should know that I would not be holding calls. Clover, I got you in at 80 cents in this stock. I'm out. I physically bought shares. I said don't buy calls because it's silly. It's under $1. The price of the share is the price of an option. I don't know anything about the business. The only reason I bought it is to say it's not fake. People accuse it of being fake. I said it does business with the U.S. government and it has billions of dollars in revenues. It's not fake. That was my premise. Up here, I don't know what it's worth. Okay, so I most definitely am not in this one. Put yourself a note to go long whenever it comes down below $1. So I'll put an alert here. I wouldn't even have it in my watch list unless you know the company. Now, if you were trading it actively, don't lose 250. You're going to 2, and I don't think you can get out of 330 anytime soon. CLS, not an obvious point of entry. The whole zone above 54 has been a selling spot for a long time. And conversely, exactly the same opposite comments is below 45. So you've got a nice area to ping pong. If you're trading it actively, I would get long into 46 or 44, and I would exit up here approaching 52. If it's an investment for the long term, just own it. Comcast, not an obvious point of entry for Comcast. Look left, and you see. How about I say it differently? Look at that good forecast right back there. Oh, that box, resistance. There you go. It was there. We're in it. And then there's a box above it and a box above it. Anything above here is resistance. Look left. All these jaggedy things make it so the first range of resistance is 44 through 41. And then a bigger one is this one. And then another one confirmed. So it should be difficult to come out of here without real catalyst news. Meanwhile, anything below 40 should be solid. So the next time we have a correction in the market, sell puts or put spreads. Chipotle, we went long on the stupid drop on a CEO leaving. If you know, and now I've run multiple companies before, so I know the worth of a CEO and a CFO. If the CEO is as good as this guy is because of what we saw happen to Starbucks, he went to Starbucks and immediately got in hot water on Starbucks, by the way. If he's as good as the reaction in Starbucks, don't you think he would have left a good structure behind him? Anybody that panic sold out of Chipotle, you need a lesson in fundamentals and how to run a company and all of that. What did we do? We panic sold people. Hey, you want to put? Here you go, here you go, here you go. And we made money like overnight. The company's fine. I've analyzed restaurants for a long time. They turn comp sales, they turn comps like you wouldn't believe. So give it a run rate. Now, would I go long here? Hell no. I don't want to find out how good the company is without this CEO for the long term. But I knew it wasn't a down 12% reaction. So I'm not involved in investing in Chipotle, and if I am owning Chipotle, I would sell aggressive covered calls against the shares I own or against the calls I own. Great restaurant. Wait until you see a couple of quarters without this guy and see if there's any changes in the metrics that they deliver. Comp sales is their asset. Listen, I said it before when they had a bad burrito. The reason why it's overpriced as a restaurant is because of their sales growth, comp sales growth. When they couldn't grow comps and they were shrinking in comps because people were afraid to eat there, they lost their asset, right? So I know it's a stupid statement, but it's true. The minute you start seeing comp sales without a bad burrito headline drop or slow down in the growth, then that's a warning sign. This is not the same Chipotle without the guy that left. Coin, I would be out. If you're in it because the rally in Bitcoin, just trade Bitcoin. This is like gold stocks versus gold, Bitcoin stocks versus Bitcoin. So pretty wild P&L. You're going to have to study the company beyond the financial prints. And quite frankly, I'm not ready for it. Why do I need to? I'll tell you why I wouldn't need to. If this one is rallying, 100% Bitcoin prices are rallying. I don't think there's a scenario where this is rallying and Bitcoin is falling. Why bother? Put P&L stuff on your risk. It's cheaper to buy Bitcoin. And you don't have to buy a full Bitcoin. You can use ETFs. BITO would be better than this one. Okay, so if you lose the white line, you're going to do these arrows. And by the way, they haven't undone it. They lost the white line, and now they're trying to recover it. This is not recovered. How about I say it differently? If it's not out of 215, it's in danger of going to 115. This is a real statement. If it's not above 215, it's still in danger to get to 115 or lower. Okay, so down here is not out of the question. Look at it. So let's give you the visual. The last time it rallied this much, it went to here. I'll leave it there. You're saying, oh, that's not going to happen. Okay, let's do this. How about we do this? Are you convinced? Let's do this and walk away and see what happens. It is not a long here. Costco. We discussed this a lot this week. This was fun. We did two iron butterflies, and they didn't lose money. And if you did this one, you made money. That's the trading part. Awesome company. They print money, literally, and they have a great business going. So even if they drop to 840, it would still be a bullish scenario, higher lows and higher highs. So if I copied and pasted the price action, you'll see how it's like these ascending hooks, upside down hooks. Those have a name, by the way, like an ascending inverted scallop or something like that. So as long as this dip doesn't go beyond halfway of that, assume another one can form. So it's a buy the dip stock. If the market's correct, this one has a lot to give back just from a chart perspective. Until then, so I don't see a problem with this one, like a major problem, until we crash in the markets. And this is how it would happen. It would drop into 800, bounce, and not be able to beat, say, 860 and lose 800 again. It will go to the 700 or lower. But that's over months, and you need a bearish market, which we don't have. So it is a buy the dip as a trading, and wait for a better entry as an investing, unless you know how to use options like we do. Then you can surgically enter yourself into a long-term position that you can start it at any point in time. But if you're looking to buy 100 shares, this is not it. I don't know what this one is. United States, what? Copper. Okay. Everything I said about gold applies here. It's looking like it's in a spot where it's going to be difficult, but buy the dip and you can carve yourself an inverse cup and handle attempt. So buy the dip in this one, in 227. CRM, great company, not an obvious entry point just because it's entering a place where it's failed before. But the good news is that it's breaking out of a place where it's failed before. So it beat this candle, which is monumental effort, by the way. So now it would be great if it comes back down and solidifies 260 as a base in order to make a higher high. Great P&L, good leadership. They invented the cloud, by the way. They convinced every company that a subscription model is better than anything. This is it. This is the mother of all cloud businesses. Microsoft, all these big guys that sell services now, Adobe, Intuit, QuickBooks, whoever does that, yeah, that's Intuit. All of these companies owe this company their business model. Nobody sells software anymore. They sell service as a software, right? This is where it came from. Is the tiny company that beat Microsoft at its own game with its CRM. This is it. So respect it. Buy the dip, yes. Where I would love it is 258 or lower, shorter term. I don't know what this is. It's probably a wrong ticker. We'll skip it. Cisco. Go along with everything. No, don't. This is not an obvious. This is a nope, not an obvious point of entry. Between here and 55 is an exit zone. Get in closer to 50. CVS, I wouldn't touch it. I don't understand it. Why is it falling off a cliff? I don't know what's going on here. I honestly don't know what's going on. So I would stay away from it. It's falling off a cliff, and you look at the P&L, there's hardly ever a change. So now are they going to bring it back to 70? If I'm stuck, I would sell aggressive calls to get me out for a loss. That's how badly I would want out of it. If you know what's going on, then trade that. Technically, you're going into a death zone, anything above 64. So let's say I bought the shares at 70. I would sell a 66 call aggressive at the risk of getting called away for a loss. But this way, I'm like trying to lower my cost basis to where we are right now because I don't know what the hell's going on. Think about it. Markets have never been higher, and the stock cannot find a floor. It finally did, but who knows? Okay, Caesars, going into a prior fail zone, anything above 43 to 46 should be very, 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 very difficult. If you look left, you need a headline to bust through all of this. So buy the dip, yes. If you bought the dip, perfect. You can just stay in it, put them to work if you know how. If you're stuck from 44, I would cut my position in half. Because if it then dips, then I would get to double my position down in the 36 area. That's how I would do it. Look at it. Look left and ask these people, hey, what happened the last time you bought your shares? We discussed this in the live room yesterday, I believe. Somebody asked, what about Dallas, Delta Airline? Not for me. This is an incredible rally on what? Earnings? Did they deliver? Oh, earnings are up in 11 days. I would be out like a light. If I went long for a trade and I'm still wondering if I should book my trades, book with confidence. And if you want, leave a runner all the way up to 60. Otherwise, you should find extreme sellers at 56. We'll see what happens. Look left. That's what happened. So the good news, if you break out of 60 or 54, let them break out. I wouldn't go long here. Oh, there we go. The letter R. 56.8 should be death. So if they come up to here, and you say, dang it, I missed it. Nick told me not to. Buy it. Whoopsies. What happened? We went. Okay, I forgot what time frame we were on. Buy it on the dip after the breakout. I promise. Seriously, what happened? We went to like that twilight zone. Let's do it this way. I must have changed the time frame on something. 2, 1, 30, 15. No, I didn't. Very bizarre. Anyway, you got the point? Okay. That's so bizarre. DDOG. Wow, I can't explain it. Now my letter Alt-R doesn't work. Let's see. Alt-R working. Okay. That's how you know we're live. Okay, so I put this blue box here. I forget why, but we're at the edge of it. We're struggling with it. So you have sellers at 120. You have another set of sellers at 128. If you take out last week's high, you might have an opportunity to hit 128, and that would be an exit for me. Or buy the next dip. with confidence. Look at the P&L. This thing is legit. So it's in a buy the dip mode, yes. Buy calls here, no. Buy a call complicated thing, yes. Sell puts to buy calls, yes. Why? Look at this the box. It says support. So chances are it's now resistance. So if I move it forward to here, I would say this is potential sellers because they were buyers. And now they're probably going to say, get me out. I got stuck and I can't get out. And meanwhile, we kind of forecasted the dip, right? We said resistance, they went above. First of all, they fell, and then they went above, and then they came back to the goal that we thought that they would touch. So look how wide the range is, and we're right in the middle of the range. Sell puts to buy shares. That would be what I would do. Dollar General, I wouldn't touch that whole thing. There's nothing that costs $1 in the US. You can't have a company business that centers around being $1. That's my opinion. They're stuck in this no man's land. You go in there, there's nothing for $1. So I don't know what's the deal there. I don't think they come back to 117 or 120 ever. And if they do, it's a sell, sell, sell. So if you're stuck long from 100, the closer to 100 would be an exit point, or start selling aggressive calls at the risk of getting, with my risk profile, I would say, oh my gosh, I bought it for 120. Let me sell 100 calls at the risk of getting called away for a loss if I can. I wouldn't double down. Disney, buy the dip worked. They're punching through resistance. That's because it's a great company with great assets and it has a solid fundamentals. And don't fall to narratives from social media. They're not doing you a favor, okay? They're not doing you a favor. Do your own research. One second. Okay. Look left. We have a collection of sellers that might want to exit here. So it's a buy the dip, shorter term. As an investment, it's not an emergency to go long. I mean, you can just don't go all in. Just don't go all in. Devon, I wouldn't touch it. They're selling rallies, and 40 is a sell zone. 40.5 is definitely a sell zone. You might revisit the lows, although they look like wicks. So let's zoom out. Yeah, not for me. You might drift lower, closer to 30, 31. I don't like these. So anything below 34 would be more attractive than here. They're selling rallies. You just want to see if they're going to repeat that rally sold lower low. Just copy paste, right? So from here to here. What if it happens? Whoops. What if it happens again? This is a, solid, this is a weekly, so it's like a very slow paced rally and sold. It's not a bad hold. Oh, with that, video 1 is over.